the beginning of a reset. One of these big banks, the Western banks, fails to deliver, creates a daisy chain of defaults and of forfeitures and bankruptcies and counterparty risk and credit default swaps and like bringing in AIG into the moment again, and boom.
It is extraordinary that here we are with gold shooting into new high ground, and the amount of interest in, if you like, the Western alliance amongst the people is virtually zero.
The problem with silver is there's not an alternative to silver in so many of these different uses, whether it be solar, medicinal, technological. Silver's the best conductor there is. So there's not a replacement for it. So if the price of silver goes higher, what do?
Join our WhatsApp channel for real-time updates, breaking news, and expert predictions on gold, silver, and financial markets. Link in the description or pinned comment. Stay ahead of the curve. Don't miss out.
Well, certainly in the over-the-counter derivatives, I mean, it's counterparty to counterparty. When you look at the futures, that's, you've got a central counterparty in the form of COMEX. Is COMEX going to survive this? Well, this is, I think it's a force majeure, maybe in prospect, if this really does deteriorate. And this is where David Webb's book, The Great Taking, comes in, because what happens? I mean, the Great Taking is taking what you think you own in terms of bonds and equities and all the rest of it, registered through a central counterparty, and that central counterparty taking that because they have a prior lien on it, as it were, from the issuers, direct with the issuers. They would take that and use it as collateral, basically, in the event of a market meltdown, credit collapse, whatever, however you like to describe it. Okay, they'll still owe it to you. But you may not quite like the idea of, say, your gold ETF being taken from you and deployed for other things without your permission. I mean, the fact is you don't own it. And not only do you not own it, but also the central counterparty doesn't own it. But they've got a piece of paper that says they can use it as collateral. That is basically where we are. And I think this crisis is really beginning to hot up. I do see higher interest rates as a result of the credit bubble deflating. That will take down capital markets big time. And getting back to what you were saying about, why people just don't understand, the gold is money and all the rest of it. I mean, you look at the mining sector, and the big brokers have spent nothing on researching mines at all. I mean, to them, it's been a dead duck for so long. They've been chasing, cryptos and, NASDAQ stocks and all the rest of it. That's where their research effort really is. Not the research in high tech counts for very much, because that's all momentum stuff rather than value stuff. But you can see that that with nobody really covering the mining stocks, that is why there is so little interest in the mining stocks. That is obviously going to change, and I suspect that with gold going over $2,800, and I think maybe even going over $3,000 in the not too distant future, there's going to be a wake-up call for people who don't have gold, don't have mining stocks, and thinking, what do we, we better, equities are tanking, it's not doing terribly well. My goodness, what do we do with our portfolios? And I think you'll find that investment managers will rebalance, by which I mean they will sell down the momentum stocks, and they will look for value elsewhere. And there's one sector which is absolutely screaming out value, and that's the mining sector. And I think that's where they will go. But they've got to be they've got to be scared into selling, the momentum stocks first. And incidentally, I've run charts in the past, comparing Bitcoin with NASDAQ. There's absolutely no doubt at all that it's the same cohort in both markets. And when NASDAQ crashes. I mean, I remember was it in what they call the Great Financial Crisis, which will be minor compared to the one which is potentially ahead of us. I remember how NASDAQ really plummeted. I mean, I can't remember what it was, top to bottom, but I mean, you look at sort of it's 80% or something like that. I mean, and, you know, if that happens again, and it will happen again, and I think it'll be more than 80%, you know, where's your Bitcoin gone? And again, I think that a lot of people have gone into cryptocurrencies as an alternative to gold, and they're going to get a very, very nasty shock. It's just totally the wrong thing to do. I mean, okay, if they banked some, you know, if they banked some of their crypto gains and moved it into gold, I mean, well done them. But most of them will go to bed with this one. You know, they'll lose a lot, basically.
2 to 3 days. Now it takes 4 to 8 weeks. And it's not just from the Bank of England vaults. Evidently, it's from all sorts of vaults all throughout the LBMA network. And what it tells you is that they don't have the gold to make deliveries. It's not taking that long to refine them. That means if they have to refine them, they don't have the gold. And that means the gold that they show that they have is not for sale. No one's getting rid of it. And if they don't have the gold, how close are we to some sort of an event? Where, you know, I think in London, the numbers that if I remember David Jensen talked about, they trade twice global annual mine supply per day, every day. In silver, it's 3.5 times annual global mine supply per day. And to his numbers, 90+% of all of these trades are paper naked trades. Now, the theory is that everyone's worried about a 10% import tariff on gold, and more so than silver. The argument against silver is that we're in a supply deficit here in the States, so he won't do it because he has to import it. Don't know if that's true or not, but it would make sense. With gold, on the other hand, you have, I don't know, I haven't looked lately. There's a guy on Twitter that does a great job of showing the rehypothecation of gold, but it was always in the neighborhood of 1,500% or higher. I mean, that's just conservative. It's probably much higher than that. But that means that the contracts are sold over and over and over and over and over again. 15 people have the same contract thinking they have their own contract is what that would basically mean. And cash settlement is very, very close at that rate. I was talking to a guy the other day at dinner in my community, and he is involved in aluminum and had a force majeure moment where his manufacturing business needs lots of aluminum, had contracts they couldn't deliver, they cash settled. It's force majeure. That's what we're setting up for here. And these players are saying, man, I got all these contracts. And when you have a contract, if I go short and you go long, well, most people just cash settle. Most people like Miles Franklin, 2 bottles of water here. This is 5,000 ounces of gold in my warehouse, 5,000 on COMEX. I sell here, I own physically here. If the price in my warehouse drops by $100, I'm down $500,000 in gold, but I went up 500,000 on what I sold short. I'm not looking to take delivery. I have it covered. A lot of the people are just speculating the way they do in buying stocks or going to the casino, and others are manipulating the market. And they manipulate it by naked shorting because they got massive, massive checkbooks. And maybe they're even being told by the Western elite, go ahead and do this for us, would you? Thank you. And by doing such, remember, you as the long have the right to say, no. I'll stand for delivery, thank you. And that's what we saw in January. Massive deliveries, right? So what if everyone says, I see you guys are screwed. Delivery, please. Now, isn't that what the Hunt brothers did? Sure is. Hunt brothers saw the same exact things, and the exchange changed the rules on them. Said you can go long just 1 million contracts or so. You can go short as much as you want. Please, thank you. I mean, stupidity. But the point of it is that, yes, that is the rumor. But I would look much past that and say what you see are these claims, these promises of delivery in London. You got a whole big vault full of IOUs and a little bit of gold. And I've been saying forever, and maybe this is it. You know, the little boy who cried wolf, here I am. One of these days, wolf will coming, and maybe this is it. Maybe They all say, we got them cornered, y'all. Let's stand for delivery and watch what happens. And that's what they're doing. They're getting it home preemptively in case there are tariffs, because they know they cannot come up with the gold. But lo and behold, having the same problem in London with these delivery delays. So, you can only manipulate a market over a very long period of time by pushing it in the direction that it is going. They are trying to hold back the global demand of powers that are as challenging as us, especially when you combine them all together.
Gold market tightening already in place. And I mean, you're seeing that, you're just seeing that on COMEX. You're seeing it because LBMA is having to ship metal. I mean, 400 tons, that's a lot. That's more than what COMEX delivers probably in a year's time. So there's already tightening from the standpoint of, big money. I can tell you the retail demand in the United States has definitely slacked off, and we're now seeing a huge amount of sellers. And I think that's a function of the real economy has been much softer than has been reported. People have eaten into their savings, and they're liquidating gold, they're liquidating silver to survive. And once that went off, then gold would immediately go off. So I don't think there's going to be, I do believe that the deliveries will be done for February gold on the COMEX, but I think the real problem is March silver. If you look back, and I mean, you can look, going back to the 1980 episode, just go look back and you'll see that the reality is, because silver is such a small market, that sentiment and flows affect silver far greater than gold. And I guess the easiest way to explain that is, in a bull market, silver goes up faster than gold, and in a bear market, silver goes down faster than gold. So in my mind, the reality is that once there's a trend that has begun, silver leads, gold does not. To this point, and I mean, obviously we've had a pretty good run. To this point, silver has not kept up with gold in this particular move. But if you look at past moves, I mean, go back to, 2010, 2011, gold ran up to $1,800-$1,900, but silver ran from,
Don't forget to hit that like button. It really helps out the channel. And if you want to stay updated with more content like this, be sure to subscribe and click the bell icon so you never miss a video.